and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we will help you understand the trading setup as well as market strategies for the day, and of course, an outlook for the week ahead as well. Remember, we'll start off with a recap that Indian stock market indices, they ended lower for second straight session on Friday, and in fact, they also closed the week in the red. That was amid heightened volatility. There was geopolitical tensions that were on the rise between Israel and Iran. That led to a spike in the crude oil prices. A whole host of volatility was being seen because of that. So Nifty gave a negative weekly close after making a high of about 25,222, which will now be an important resistance level for all the traders to keep in mind as well. Again, for this week, investors will be tracking the ongoing conflict between Iran and Israel, Brent crude oil prices, how they hover now, inflation data that will be coming out, and of course, US Fed interest rate decisions for further cues. Of course, tariff-related news will also be dictating the trends for the equity markets this week. Remember, as far as the geopolitical tensions are concerned, Israel-Iran conflict has continued for the fourth consecutive session now, with no end in sight. What has happened is that President Donald Trump has repeatedly, expressed hope for a peace agreement. Donald Trump has claimed that many calls and meetings are happening behind the scenes. He's also held an hour-long call with Russian President Putin over the weekend as well. He also did indicate that he would be open to having Putin mediate the conflict and also, broker peace between the two nations at this point in time. Now, amidst all of this, how are the global cues shaping up? On Friday, we did see that the U.S. equity markets ended lower, over 1% loss for the S&P 500, as well as for the Nasdaq as well, is what you did spot as far as the Friday session is concerned. Now, of course, after that, we've been seeing that the U.S. markets in futures are actually showing a mild uptick after Friday's decline. Dow Jones was down by 1.8%, the deepest decline that was seen there. Nasdaq was down 1.3% and 1.1% decline for S&P 500. But the futures are indicating to a mild positive, and that's a bit of a positive cue as well. Asian markets were trading in caution right in the morning trade. A mixed trend is what we spotted. Japan's Nikkei and Kospi for Korea was seen rising about 0.7 and 0.29% respectively. China was up just mildly. Hang Seng was down in the early morning trading session as well. We are now seeing some gains further come in as far as Nikkei and Kospi are concerned. GIFT Nifty is also indicating a start above 24,800 now. A positive start is what we are given to understand. Now, we will also keep an eye out on the Brent crude oil prices. Remember, viewers, they were up about 11% on Friday. We did see them nearing the $80 a barrel as well. Now, they remain firmly above $75 a barrel, and one really needs to see as to how it shapes up going forward. Remember, oil prices are already up 25% since early May. So within days of hovering around $60 a barrel, we've actually seen a very strong spike in the crude oil prices, and that's something we'll keep an eye out on. How are the foreign flows placed as far as the Friday session is concerned? Foreign investors were net sellers to the tune of 1263 crores. DIIs were net buyers to the tune of 3,041 odd crore rupees. So we'll keep an eye out on that too. Let's also focus on the key stocks that you should be watching out for today. Of course, we have a whole host of them there. We have Zeal that will be important to watch out for. That's Z Entertainment. Here, the company's board is going to be meeting to discuss business review, fundraising options with investment banker. Bajaj Finance will be in focus. Remember, today is the record date for the 4:1 stock split and the 1:2 bonus as well. So that will be in focus. Godrej Properties, it's announced that it's going to be developing a 14-acre land parcel in Bengaluru with a revenue potential that could be estimated at 1,500 CR for the company. Positive news for the company. Vedanta will be in focus. The Anil Agarwal owned a mining conglomerate that will be holding a board meeting on Wednesday, that's June 18, to consider an interim dividend proposal. Now, this could be the first such proposal that the company will be discussing for the fiscal year 2026. They have also declared the record date for the interim dividend. Whatever they decide on coming June 18 will be seen as a record date that will be doled out on Tuesday, that's June 24. So keep an eye out on Vedanta also in trade today. ITC will also be in focus. The company's acquired Shrestha Natural Bioproducts for an upfront consideration of 400 CR, and that will be now a subsidiary of the company going forward. We also have SpiceJet that will be in focus today. Now, SpiceJet has reported its highest ever quarterly profit at 319 odd crore rupees in Q4. That's up 12 times from the previous quarter, driven by strong yields and cost control. The airline has also turned profitable for the full year with 48 crore rupees of a net profit. It's first since FY18. Load factor stands at 88.1%. EBITDA has more than doubled, and promoter has infused 500 crore rupees crore equity, further boosting the financials as well. So that's going to be in focus too. So that's some of the stocks that we are going to be keeping an eye out on. And from the pharma pack, it will be very important to watch out for Sun Pharma. One, they've got some observations from US FDA for its Halud plant, and the other one is that there are some management changes that are taking place as well. We'll go forward and we will discuss all of those with our top market expert also just in a bit. We now will be looking forward to welcoming our guest, the Mr. Dharmesh Kant, the head of equity research at Chola Securities, will be joining in just a minute. We will be looking at also, so he's here with us. Hi, Dharmesh, warm welcome. Good morning to you, and good to have you with us this morning at the start of this week. Now, I want to start off with the global picture first, because that is going to be probably the biggest factor that may drive the sentiments again for this week. The sentiments turned a bit sour on Thursday and Friday, largely on the back of fresh geopolitical concerns that erupted between Israel and Iran. Over the weekend, they've also escalated even further. Both the nations have been striking each other's oil and gas refineries, and that's something that's led to the crude oil prices spiking over the last couple of days as well. Of course, we are not impacted directly with this war, but indirect impact could be large because we are again an oil importing nation, and whether there could be a further spike in crude oil, and how should we view that as a market participant as well. That's something that I want you to probably give us a broad understanding of first.
Yeah, good morning, Sakshi. Definitely, things are escalating and not in the right direction. Earlier, it was a strategic military and nuclear side kind of a strike. Then it spilled over to commercial and economic interest kind of on the both sides. So oil, gas field, and refineries were destroyed. And if it's likely that it's going to escalate further, this kind of an activity, which is not good. But for the world economy at large, it seems to be more of a regional conflict as of now, because Strait of Hormuz they have not disturbed till now, and things are volatile. But looks like again it would be a regional conflict, and the reason why I say so is because Iran is unlikely to have global support of other countries coming into the place. Seems to be isolated, and let's not forget. Around 3 4 years back, Mr. Trump had a Middle East kind of a tour, and the greatest beneficiary of spike in oil prices is all Middle East countries who are producing oil, with Russia as well. So odds are not placed in favor of Iran as of now. It seems to be isolated, and if things are like that, it would be contained as a regional conflict. Having said that, in short term, it does look like some kind of a disturbance on the balance of payment from our country side of perspective. It can take place, but I don't think this is going to last long. The spike in the oil price, it is likely to be contained, and inflationary effect of that on our domestic economy is very unlikely, because I don't think the type of profits which refiners have enjoyed, they are likely to raise the petrol and diesel prices. So net, if I sum it, having a look at the global economic scenarios of now, where there is a recession in Europe, Japan is also not doing well. Even China industrial production was not that great, and there was no flight of money to buy US bond in such circumstances. It is usually the scene, but it has not happened. So the money is still there for risk takers in the equity market, and there I think India stands finely placed as of now, considering all the macro aspects in place. So it's a buying opportunity for our country.
Okay, got that. So Dharmesh ji, help us understand with respect to the inflation macro data that we saw last week. That was pretty encouraging too. Now, what we're given to understand is that, of course, there is this overhang on the crude oil prices right now, and we do not know whether this will escalate going forward from here. But so far, like you also pointed out, it could be contained, and it may not spiral just out of the blue at this point in time, because that's one of the brightest spots that we have been looking at. Encouraging encouraging signs from inflation, and therefore the leeway for the RBI to continue to keep cutting rates. We did see like a 50 basis points of a sharp rate cut even in the last meeting, and there are further expectations also that the rate cuts could continue if the macro data continues to support, because that will further set the ball rolling for the economy, which was on a slowing path. How would you look at this aspect and the overhang? Because if fuel prices rise, if oil prices rise, this could again alter the course of the inflation in the positive direction.
Yeah, definitely. But Sakshi, let's not forget, after 40-50% kind of a price correction from, last 12 months highs of oil prices, it has rallied only 10% kind of an upside. In such an event, earlier, the history, if you have a learning from the history, it suggests that there should have been at least 30-40% kind of an hike. It should be above $90-$95 a barrel if it was a very serious kind of an issue. That has not happened. In fact,
Yeah.
there has been cool off as well in the oil prices. So that is point number one. As far as transportation is concerned, inflation can only happen if you have a hike in petrol and diesel prices. That is administered price by the government as of now. So that's unlikely to happen currently. Coming to the manufacturing companies which use crude as a byproduct for different kind of products being manufactured, paints being the classical case in point. So normally they have an inventory of 30-35 days. So and they don't buy immediately. So they can always, there's a leeway window of at least 5-10 days to delay their purchases. And if that's the case, I think we should wait and watch and see how this is going to pan out. And normally monsoons is usually a lean season for most of the manufacturing companies. So immediately, I don't think this is a matter of concern. And I mean, last 7-8 years, I don't remember when there was only a 40 basis point kind of a gap between the US CPI inflation and India CPI inflation. So that's a very big positive factor for our domestic country, likely to be
Hmm.
contained. And monsoons have not been so disruptive. It's monsoon as usual. So, I mean, food inflation can spike, but having the higher base effect, I think even that would be likely to be contained. So, nothing much to worry on that count as of now. And going by previous understanding of the flow of events, I think going forward, it should not be a matter of concern.
Not be a matter of concern. Okay, we'll definitely look at that aspect too. Of course, the pre-market open, implied open are indicating of a 73 points of a start on the positive side. 24,800 is where we are looking at as far as the Nifty is concerned in the pre-open trade. We'll keep an eye out on that. But we also have to focus on the tariff announcements that could probably come in this week. Now, what we're given to understand over the weekend is that finally China has also affirmed that they do have a deal with US at this point in time as well. Of course, the contours are yet to reach in, but there is some kind of an arrangement on the rare earth magnets was also that was the key conflicting point, that was being raised over the last 1 week. So there is some kind of your positive comments that are coming in on that aspect as well. There are also some indications that probably with all the trading partners, US could be looking at extending the July 9, deadline that we are looking at right now, because for India specifically, we don't have a deal in sight or any comments on the same as of yet. And with other countries as well, it's only been just two nations where they have largely struck a deal with UK and China. How would you look at these developments with respect to tariffs?
Very positive developments. And Sakshi, the caveat here is you should be hearing other countries when they come out with an official announcement and not going by what US President is saying about the tariff deal. So the better way of looking at it is if China Premier confirms that there is some negotiation happening out there, then there is something up there on the table. And this was likely to be the case. I mean, July 8 deadline, and now Trump is saying that he is willing to extend, and that is how those things are going to play out. It cannot be settled so easily, but I mean, negotiations are happening. People are unwilling to commit as of now because any noise, I mean, any inflow from that aspect will influence the trade balances adversely or favorably, depending upon the beneficiary of the news flow. So that they are holding, which is a good sign. My own sense is it will be settled gradually, but definitely there would be some impact on the cost of manufacturing for all the producers and the consumers. So that definitely will be there. How much is the point in question? So going by the kind of trade balances which has taken place in the month of March and then in the month of April, it seems like June and July would be a muted, month for any export and import happening until they await such kind of a clarity. So net it's a zero sum game till now, and not much of a material impact on the profitability of the companies. Marginal, I mean, 100 basis point kind of impact you will definitely see because there has been some levy of tariffs out there. So that will play out. The other aspect which is very encouraging is there has not been any significant move in any of the commodity prices except copper. Copper is the only commodity which is up 18-19% year till date. Apart from that, if you look at steel or rubber or zinc, aluminum, all have been fairly muted kind of a play. And dollar index has again cooled off, so that's no alarming sign out there as well. So as long as US currency remains stable or currency balances are now they're behaving more maturely and a more stable platform. So all these factors do lead us to the kind of monetary policy incentives which are coming from different central banks. This week itself, 7, 8 central banks are meeting on their policy outcomes. So this will eventually play out, and that would play out in the favor of the economic growth. And valuations have, are reasonable now rather than very heated. So definitely good for the economic environment.
Okay. The rupee has opened at 86.18 against the dollar. That's something that we are looking at. And then the pre-open also now you're seeing some volatile trades. The Nifty is now in the red at 24,700 and thereabouts. So we'll keep an eye out on that. Slightly more weaker opening for the rupee against the dollar as well. Dharmesh, how are you looking at the safe haven assets out there? Gold saw a huge spike because of this geopolitical tension last week, along with the crude oil prices that we saw. But I think it was not the same reaction or a risk-off sentiment that was seen on dollar, because the dollar index still remained under $99, under 99 point levels. So how would you look at what's happening with the alternate asset classes that are usually seen as safe havens among such kind of situations of geopolitical tensions? How would you look at that?
So, I mean, the basket is getting squeezed as far as haven is concerned. Earlier, it was gold with, US dollar, US currency. And at the same time, US bond used to be a safe haven asset. But going by the texture of the liquidity flows which has happened over last fortnight, it does look like that US itself, because of its own doing, is losing that safe haven kind of a status. So there has not been a significant bond buying, nor there has been a buying in the US currency. What has been bought into is definitely bullions, and their gold, stands tall. So given the context in which the geopolitical moves are, happening, it doesn't, I mean, it doesn't appear that it's going to settle soon. So this is likely to aggravate and it's likely to stay there for a while, maybe 3, 4 months more. And in that scenario, gold will continue to shine more brighter. So new highs will be there in the offing. And if you're invested in gold, the SIP method is the great method to be there. And
Correct.
anyway, Sakshi, after this tariff thing, there would be a new world order on the trade balances, and that will take a year and a half to play out to give you a stable sense of direction. Till that time, gold would be definitely a better asset class to be invested into. So, if you are buying, keep buying on a SIP method, and if you are an investor, you're holding, be invested.
Okay, fair point. Let's also welcome Vaishali Parikh, Vice President Technical Research and Analysis at Prabhudas Leeladhar, now joining in on the program and the panel with us. Hi, Vaishali. Good morning to you. Good to have you with us today. Let's start off with your market outlook for the day and for the week, and of course, help us also understand when it comes to the key stocks that you'll be watching out for today.
Hi, very good morning, and I hope it's a good start. We have seen Nifty breaking 25,000 levels, and currently we are at 24,700. So, the bias is a bit corrective to sideways. For this week, we would have a range of 24,400 as support and 24,900. So, either ways, if we see a decisive breach or a break, could decide the further trend of the market. So likewise, even Bank Nifty is a bit sluggish right now. So I think it's a wait and watch scenario with crude rising. So of course, ONGC oil likely to do well. And as you're asking me, the stocks that I would really focus on is, as per Friday's movement, we saw BEML catching up well. We saw Idea Forge getting into new round of momentum. So these are the stocks that I would be focusing on for now.
Okay, got that. So I hope viewers have noted all of that down as well. Dharmesh ji, coming back to you. Any key sectors that are coming fresh on your radar right now that you would be looking at into the markets, maybe to add any fresh positions?
I mean, sectors are the same. There has not been any new sector which has come onto the fore. And they remain, I mean, defense stocks continue to be stable, and any dips out there is an opportunity to buy. At the same time, railway infra continues to be doing well. Metal is one sector which is for the breakout, but definitely it's a good sector to be in. And the topics out there may be a JSW Steel and a Hindalco, which offers you both ferrous as well as a non-ferrous play. Apart from that, banks are looking pretty well, and banks, both private and public sector bank, you can have your call out there. But one stock which looks to be a a greater beneficiary in all this scheme of events which is happening is Reliance Industries. So
Yeah.
there we are quite bullish on from a
Okay.
fundamental perspective 1 2 years. So that's another stock which one can be look into from even a trading perspective.
Okay, got that. So I hope viewers have noted that down as well. The top 2 or 3 key sectors that Dharmeshji is looking at, and a couple of stocks there that he has also marked out for a trading view too. Now, Dharmeshji also wanted to understand from you, and I'll come to Vaishali also on the pharma space. Pharma science also started to improve a little bit, and now we have at least the largest company by pharma, by market cap that we have, Sun Pharma, in focus. The drug maker has talked about changes in the management, naming Kirti Ganokar as the managing director effective 1st of September. The company's current managing director, that's Dilip Shangvi, he will continue to chair the board as a executive director now, and he's Mr. Gunarkar has been appointed for a period of 5 years. That's what we are given to understand. So some changes now happening on the management front. At the same time, Sun Pharma is now facing some fresh concerns when it comes to the observations that have been given on the plant as well. 8 observations that have actually come in, and we will have to see the nature of the 8 observations and what kind of an impact can be seen. Although UBS has continued to maintain a buy rating on this one, despite the observations that have been marked out, they've only flagged that yes, we will have to check what kind of these observations have been presented by the US FDA. They've kept a neutral rating with a target price of 1970. How would you really look at, and of course, what we are also given to understand that Nomura has also pointed out this, that Kirti Ganokar will be in the role for the next 4 to 5 years as has been directed by the company itself. But Brokerage believes that after that, it actually expects Alok Shangvi to eventually take over the role. Alok Shangvi is the son of Dilip Shangvi. So that's something that we are eventually looking at changes at the top level when it comes to Sun Pharma. How would you look at the company with all of these news developments?
Yeah, a lot of developments has happened in Sun Pharma. So as far as management change and a stopgap management kind of thing is there, it's a natural course of the business. Normally it happens this way, and it's good that a more professional approach has been taken by the management in handholding and handover kind of a thing. So nothing wrong out there. And he's a veteran, Mr. Kirti, and an insider to the Sun Pharma, so he knows the business pretty well. The problem is with the entire pharmaceutical industry is that US tariff overhang still continues. There is no clarity as to that. Though right now there are no noises being made, then you seem to have a feeling that everything is well and settled. So that is not settled. It is definitely likely to come up again and get settled. As of now, things are proceeding as usual. But the observations of the Halol plant, which is the biggest facility, yes, 8 observations has been there. Let's see what are the replies and what are the lapses being noticed by them. Nothing serious to my mind, but again, you never know how US FDA comes out with a warning letter or a serious kind of an observation. So that has to be seen. Net, what I would suggest for players who are looking to as a trading bet in pharmaceutical, it's not an investment play no longer having seen the kind of movement for the last 1.5 years. So now what we are advising our clients is to go for our trades, and there Aurobindo Pharma looks to be a better bet along with
Okay.
Cipla as of now, rather than a Sun Pharma.
Okay. Vaishali will take your view as well on the pharma pack overall and on Sun Pharma. After this development, what does one really do? There could be a sentimental negative reaction today after the news flow of the observations that has come in. How would you look to play this one?
I think it can go towards 1600 levels. That is a level to watch because that would be a crucial support. But I would now shift my focus, I think, to stocks like Lupin. They are technically well placed. Even in the cash category, if you look at Natco Pharma, etc., Gland, they are all looking quite promising from here on. So technically very well placed. If you ask me about Natco, 917, it's already been consolidating since a pretty long time. So I would say 850 is the support. This can go towards 1100. Lupin also, considering the market levels, I mean, if you see the longer term period time frame chart also, it is consolidating. And I think this should do well.
This should do well. Okay, we'll definitely keep an eye out on that one. I also want to ask Dharmeshji on the aviation space, especially SpiceJet. That's in focus after a long haul, and especially on the back of positive news flow after a long haul is what we are seeing here, Dharmeshji. Profitability after the longest time that we can probably remember, a huge jump in profitability that they have reported. EBITDA has doubled as well, so improvement in the financials overall in the results that they have posted. Are there any signs that the company is getting back on track, or will it be jumping the gun because this is just the first print of positivity that we are getting from SpiceJet at this point?
I think let's give it a time, one more quarter to SpiceJet. Definitely things are looking up for the aviation space. But SpiceJet, given the history it has, I would like to, give it more time and take a call. But we are bullish on the aviation industry, and there I think Interglobe Aviation is a good buying opportunity at every declines. It's likely to stand tall given all the circumstances and the type of fleet order there in place.
Okay, got that. So that's as far as SpiceJet is concerned. How would you look at Indigo at this point, Dharmeshji?
Yeah, that is what I said, Sakshi. It's a great investment buy at current juncture. And
It
with
is.
the kind of, yes, yeah.
Okay, wonderful. Vaishali, how about you? Indigo versus SpiceJet, what would you play today?
Has come with good results and it's showing a spike. So I think technically this has got a lot of scope now to participate. So let's not be in a hurry because of course today it's because of good results and all, but otherwise Indigo has already been in a very strong uptrend. So I would take SpiceJet for now as a trading perspective, and Indigo even for a long term I would, because it's already in a trend. So that tells us that yes, it's going strong.
Mixed opening for the markets today, viewers. You are seeing some volatility right from the beginning trade, be it on the Nifty Bank, be it on the mid and small caps. They're all hovering around the flat line at this point in time. Now the Nifty is picking up some pace. You can see a 0.25% uptick and 24,785 at this point in time. There are about 898 advances to 856 declines. So even Stevens, when it comes to the market breadth in the advanced decline ratio as well. 0.25% uptick even on the mid caps. You're also seeing some gains coming on the small caps now. IT sector 0.2% higher among the other heavyweights as far as the space is concerned. Sectorally, action is weaker on the PSU banking space, but the Nifty Bank, financials, capital goods, pharma, realty, oil and gas, capital goods. We've marked out autos, IT, FMCG, and also energy index seems to be opening higher. India VIX is just slightly lower in trade at this point in time. Top movers on the Nifty are Power Grid, Bajaj Finance. You also have a Cipla that's on the positive side as well. Asian Paints is up in trade. BEL and HDFC Life. That's another one that's on the positive side as well. On the losing side, Sun Pharma, what we've discussed, Dr. Reddy's. So the pharma stocks take a backseat today. Coal India slightly lower, about 0.5% of a weakness that can be seen on that one as well. Quick comments, Vaishali, on the opening.
Well, that the market is holding on. So I think this can bounce further towards 24,850, 880 levels. Then let's see, is it crossing 24,900 and sustaining above that? We'll have to wait and watch for that.
Okay, Dharmeshji, we have to let you go, but before that, we'd love to hear from you. As far as your outlook on the markets is concerned, we are, of course, we've seen that 25,200 odd mark as the recent high that we have. Remains to be seen whether things sort out globally to again focus back on our domestic moves that was already getting on an encouraging path. What exactly is your focus right now as far as the markets are concerned? What is your outlook?
So actually, the focus is very clear. We are a buyers on decline. I do think that market is likely to be in a range. I mean, 24,500 to 25,300 or 400 for at least 20 couple of weeks more. It's likely to be a range bound kind of a market. But eventually, this is moving up, and this is all this. I mean, our dips are an opportunity to buy the market. There can be a sudden, exaggerated move. It can, I mean, 500-600 point on some bad news flow coming through, but there's a probability of that. But we are looking at buying opportunities, and we are not looking at this market from any fear kind of a perspective that let's wait for a month and then we'll switch. That's not the idea at all, because all the macro tailwinds are playing very much in favor of our country. And even I think the geopolitical issues which are surrounding the globe is eventually going to favor India. So, I mean, tactically, we are better placed. So, by the dips, sectors we have already discussed. So, all those 4 or 5 major sectors are the ones who would be the flag bearer of next leg of the uptrend.
Absolutely. You also mentioned Reliance as something within the large caps that you're looking at. How would you look at the mid and small caps, sir?
See, actually, mid and small cap, you have to be sector agnostic and you have to look at the company specifically, because that was the trend which we observed over, say, 500 companies aggregates which we were analyzing. 30% reported negative kind of an earnings growth. So it was not a secular trend in any of the sectors except, defense where things were better off and the railway infra. Other than that, one has to be choosy. I think engineering, research and development kind of an IT companies, for example, Tata Technology, Tata Elxsi or KPIT Technologies, these are the companies which one should be looking at current juncture for mid and small cap. Apart from that, if you, I mean, you have to be very clear about the company which you are buying. Don't go by the sectoral trend to buy a mid and large cap. I mean, mid and small cap.
Okay, one more stock before I let you go, and that's Bajaj Finance. It will be a very different number that we will be looking all at Bajaj Finance today because of the stock getting adjusted for its 4:1 bonus and a stock split into two. I mean, something that we were used to of seeing at 6, 7,000, 8,000, 9,000 is now at 937. For a lot of people, it may be coming in as a jolt, but please do not see this 89% of a drop as any kind of a drop on Bajaj Finance, viewers. Just wanted to highlight that for you. There is a 4:1 bonus that you have got. So if you've been holding one stock of Bajaj Finance up until now in your bank, then you have 4 bonus shares that have been issued to you. We also have a stock split into 2 that's come into effect. Dharmeshji, how would you look at Bajaj Finance from this point onwards? What does it mean for fresh investors? What does it mean for those who've been holding it?
See, just from the share price kind of a perspective, it's a sentiment booster for retailers. I mean, looking at 9,000 kind of a price or 7,000 kind of a price, retail investors don't buy. But if it's below 1,000 rupees, it gives them a kicker to buy into the company. But NBFCs are better placed with all these rate cuts coming in. Definitely, the NIMs are going to improve. At the same time, the business are going as usual for NBFCs. There has been a pickup in the trend. And the good part is the disturbed segments like microfinance and the personal loan and the credit card kind of a segment has shown improvement in the month of May. So there the things are picking up, the credit ratios have been improving quite faster and collection efficiencies have improved to now 98, 99%, which has dipped to below 90% at one point of time in the month of March and April. So all these are positive factors. I think asset quality is going to improve. A good time to buy. I definitely see this entire space moving up around 15-20% by this financial year end.
Okay, got that. Dharmeshji, thank you so much for being with us on the show. and helping us with all your views. All the best to you. We'll see you soon. Let's continue our conversation with Vaishali. Vaishali, Bajaj Finance at 9:37 seems too tempting if somebody forgets that, this used to be a stock that one has seen at 9,000 odd levels. And of course, now we have a fresh stock, 3-digit now on Bajaj Finance. We have to tune our minds to watch it again at these levels now.
I think one should go for it.
Go for it. Why not? If you've been buying something at 9,000 levels, of course, you already have a bountiful more stocks in your portfolio now. 448 stock that you held on to, and now a stock split that's taken place. Again, I'm telling all our viewers, please do not see this as any kind of a drop that has come in. It's only the price adjustment of bonus and split. Now, again, Vaishali shares a confidence that, you can continue to buy at 9:37 also, as you're seeing at the current level. Let's look at some of the strong movers. Today, Bharat Rasayan is something that's catching my attention, 11-12% higher. A very strong move that's come in from the broader markets. For those of you who've been looking at stocks which are buzzing in the broadest index, look at Bharat Rasayan today. A very strong move has come in. Vaishali, would you buy this after this strong move?
I would say so because Sakshi, the stock has fallen from 14,000, 15,000 levels, and now it's been in an oversold since quite some time. And today's candle looks very promising. So with 9,000 would be the support for a positional trade. And once the stock moves about 10,500, it would show us further trigger for higher targets. So yes, it makes a good buy at these levels.
Okay, got that. Let's also look at some of the other stocks that are buzzing in the broadest index. Then you have Eris Life Sciences, you have Shipping Corporation of India, PI Industries, HBL Engineering. You also have Gland Pharma, MCX, GRSE, GE Shipping, Cochin. So again, I believe it's the shipbuilder space that's coming back into focus again. A lot of those broader market names are in focus back. Dharmesh also said that he's consistently watching out for the defense theme that continues to play on, and it's the shipbuilder space that probably is leading that kind of a rally. Here, how would you play this team that carries on and continues to show promise right now, Vaishali?
So on Friday, Sakshi, we saw good run up coming in Shipping
Yes.
Corporation of India, and today also it's going higher. So I think this can do very well in times to come. It can go across 300 levels. So if you're looking at a longer term perspective, 200 should be the support, and look for targets going up to 280 to 300 for now.
Got that. So that's as far as the shipbuilder space is concerned and the stocks that Vaishali is watching out from there. Let's also look at oil and gas. Vaishali, this is the theme that everybody is focusing on. It was on a high just before the geopolitical tensions spiked as far as Iran and Israel is concerned. Now the crude oil prices are spiking. That continues to lift the upstream stocks higher, gives them more steam. ONGC, Oil India, Reliance, they're in focus. There was a reaction, knee-jerk reaction on the OMCs on Friday, but finally we are seeing some inching on the higher side again. How would you look at these oil majors, and what would you do with the gas players as well? Names like GAIL, names like MGL, IGL.
So yes, coming to ONGC, I think that's the stock that one is observing, but it needs to cross now to 260 levels because that's the crucial resistance. So once that is done, then we can aim for targets like 280 and so on. As far as Oil India is concerned, well, it's above the moving averages and still retaining its strength. So I would say, and in fact, we have been recommending this stock since quite a while. So I would say now for those who would want to get into the stock, start accumulating with support of 440. In times to come, one can see a target of 550. So this is how I'm looking at Oil India. As far as MGL, the other stocks are concerned, well, I am tracking MGL, and I think it's just in a very narrow range, 1350 as a near-term support, 1450 would be the next target. So that's the range for now that I would be looking at.
Got it. Okay, so we'll look at the oil and gas names as well. Let me just also pull up some stocks where the brokerage houses had a take and where we can see some reactions coming in. Let's pull up from the auto pack Hyundai first. UBS initiated a buy here with a target price of 2,350. They believe capacity expansion is going to be driving strategic shifts there. The company has led in driving premiumization in India. Operating leverage exports continue to drive industry leading margins for the company. And they're also seeing mix and operating leverage improvement going forward from here as well. So the stock is slightly higher after this brokerage report. 1962 is the current level, but the target price is much higher. So you can actually see about a 35% kind of a move that they expect on Hyundai Motor, because the target that they've given is 2,350. Less charts for you to really talk about here, Vaishali. But have you been tracking this?
Yes, definitely. So we talk about Hyundai. I think it's, of course, I don't have much of data, but to those who have bought it, because it's already surged high, and I think it can still further on surge high because it's on its way to cross the previous high, the issue price of, it's already crossed rather. 1934 was the high made then, 1970. So 1970, once we see a cross of that, I think this could go towards higher targets of 21, 2200. So keep a trailing stop loss. 1900 should be the stop loss and continue holding.
Okay, got that. We'll take another report. This one is from Macquarie on the IT stock Persistent Systems. Here they have an outperform rating, target price of 7,330, and they believe with an ROCE of 40% as of FY25, the EBIT margin has the room to expand going forward from here. Now, IT stocks is something that we've been watching out for. Today also the index is up by about 0.5%. Both the large as well as the mid-cap stocks have been moving in tandem these days. Persistent, what's your view, fresh view here? And of course, on the overall sector, if I ask you, what would your top choice be here, Vaishali?
So whenever it comes to recommending IT stocks, Persistent and Coforge are top of the line because they've always shown good persistent results. So I would say Persistent still continues to be a good buy. 5,600 acts as a support. So well, in a market like this, it can retrace. So 56, 5,400 acts as a good support. And well, we would gradually look for a target of 66, 68 as per the chartical data, and then from there on we can have a relook. So again, above that, I would still recommend Coforge. That is another stock to our liking, and the front runners, that is Infosys. They all look promising, and in the mid cap category, I do like APIT as well. So yes.
Okay, so that's the IT pack for you. First 15 minutes of a candle is formed. Vaishali, if you could just fill up the market chart. In the meanwhile, I'll just read up for all our viewers what's buzzing in the markets right now. We have the Nifty that's up by 0.3% higher now, 24,795. You're looking at the Nifty bank slightly on the softer side at this point in time, but you have the broader markets that are hovering higher. So the Nifty 100, Nifty 500 index, 0.2% higher. Mid and small caps, minor gains that can be seen on this one. This is despite the fact that India VIX is on a low, which is much comfortable, below 15 odd levels, 14.8 odd levels that can be seen there. Now, among sectors, when we look, autos are driving in a slow lane today. They are negative. FMCG, IT, we've already discussed, it's positive. If you have metals that are on the positive side, pharma flat with a positive bias as well. Realty is down, PSU banks are down, private banks are down. So you have the banks that are actually on the back foot right now. Consumer durables higher, oil and gas we've discussed, they are up in trade as well. So that's how the trend is shaping up among the sectors at this point. Let me also just mark out for all our viewers some stocks within the mid and the small caps that are hovering higher. PI Industries we marked, that's up. Oil India, IGL, that's something that we've discussed. GMR, Airports Infra, HPCL, BSE is another one that's also up. We could be discussing this one as well with Vaishali because there's a fresh report also on BSE, and there are targets of 2,900 coming in on Bombay Stock Exchange. That's Jefferies, which has raised the target price to 2,900. They believe the transition to common contracts note can aid liquidity and market share for the company. They also believe the newer derivatives instruments and growth in data services will continue to aid profits. They actually see a 30% profit after tax CAGR from FY25 to FY28. BSE for you, Vaishali. How would you look at this? And then we will quickly jump to your own reading of the markets after first 15 minutes candle.
So Sakshi, BSE has already seen a good run up, and from there on we saw a little bit of a profit booking. So 2650 acts as a crucial support, and that's what we saw on Friday. If this level breaks, then I think we can see a further downslide. Till then, we can expect a bounce at least till 2800. So for now, I would look at a range of 26,500 to 2650 to 2800 levels. A move above 2800 would give you further run up. So that's how I would look at this stock.
And how would you read the markets after first 15 minutes?
Well, it's still sideways. It's well within the range. Nothing much to talk. We need to see Nifty move about 24,900. It has opened positive. So if it's sustaining, we need to wait for that. Else, just go stock specific. It's quite a, because advanced decline ratio is already negative. So I won't be a, strong buyer right now.
Okay, got that. So that's something that we are looking at. Cement space is what I wanted you to focus on. Ultratech is about 1% high end trade. We have also got a Jeffries report on Ambuja Cements today. A buy rating with a target price of 700. Management remaining confident of touching capacity of cement target of 140 MT PA by FY28. It's updated on the cost efficiency target scaling up for the next few years. Management also expects industry demand to recover to 7 to 8% in FY26. That's the current fiscal year that we are looking at for Ambuja, that they say. So, how would you look at the cement players right now? Would you like to stay with the large caps, Ultratech, Grasim? Would you also look at Ambuja, ACC, and maybe even the mid cap cement players at this point? How are you looking at this space?
So, well, cement there's really not much happening. But for long-term story, of course, Ultratech, Ramco, ACC all look positive. They could give you higher returns. But as I said, market is a bit vulnerable. So I would say not in a haste.
Okay, not in a haste. That's what is being discussed at this point in time. You know, we discussed Hyundai in the auto space, but we must also discuss Tata Motors. That was showing some signs of an improvement over last couple of weeks, and we've been discussing that as well, Vaishali, with you. Fresh statements that are coming in from Tata Motors, and that's led to some weakness in the trade today. And the indications are that for JLR in FY26, the free cash flow could be close to zero. That's the expectation that the company really has. Although they continue to focus on growth and EBIT increment that they are focusing on, they also expect FY26 EBIT to be in the range of 5 to 7% for JLR. That's the expectation that they're coming in. They are also saying that for all the investment plannings that they're doing, they will continue to focus on JLR for that as well. But there is some weakness on Tata Motors today. It's again slipped below the 700 mark, now at 683. Now, I want to understand from you, Vaishali. We have seen Tata Motors really consolidate and in a very painful narrow range for a long haul in time in the recent past. Finally, things were looking up and seemed like, Tata Motors is getting back on track. Fresh statements coming in, denting the sentiments, 4% down today, intraday level for Tata Motors. How would you look at it? I hope this does not get into, again, a painful period of a long consolidation below 700 levels.
Yes, so today's candle is really very disappointing. So now I would say 650 should act as a crucial support. Stock was all this while doing very well, and I was also of the same view that yes, above 701 can look at 780, 800. But for now this today's candle, we have to see if 650 levels break, then it's ready for a further downslide. So I would say right now it is showing signs of weakness.
Okay. At this point in time, it is showing some signs of weakness, but we'll have to see how it goes forward from here as well. Let's discuss some other stocks. Let's discuss metals. Now, metals have been, of course, doing very well over the last couple of weeks again. Vedanta, of course, is in focus because it's now going to be considering a fresh dividend, interim dividend, the first one for FY26. Day after tomorrow is when they're going to be coming out with an announcement of how much dividend do they want to extend. Already they've decided the record date, that's June 24. So that dividend could be coming to you in case you are a shareholder of Vedanta. 0.25% higher for this one. What would you do here, Vaishali? And what's your overall sense on the metals and the mining space as well?
So, well, till last week, we were seeing that, of course, mining stocks were showing great strength, whether it was NMDC, GMDC, even Orissa Mine to some level, started participating. Now, talking about Vedanta also, I think the trend is still intact. 430 acts as a near-term support, and if this stock moves above 470 levels, we are looking at higher targets of 500 and so on. But, well, we'll have to see. as to which way the market is going, because Nifty is leaving the 24,800 zone and now only 40 points up. So let's see how, because if the market is ready for a corrective move, then that could trigger a further sell-off even in the middle sector.
Okay, time to read up the index contributors for all of you viewers. Some of them we've discussed, like Tata Motors is the top contributor on the negative side for the Nifty today, 13 points on the downside. Banking stocks not really supportive. Axis Bank, SBI also on the downside. Geo Finance, Adani stocks like Adani Enterprises and Ports also weak. On the positive side, however, HDFC Bank is bucking the trend. It's contributing 17.5 points to the Nifty's gain at this point. Bharti Airtel is contributing 13 points. Infosys, L&T, TCS, Power Grid, ITC, Cipla, these are the positive contributors. Let's start off with the banking space now. We haven't discussed that one as much today, Vaishali. HDFC Bank versus what's happening with the stocks that are lower. The Nifty Bank itself is overall down. So how should one really be looking at the banking, large private sector banks at this point?
So I think ICICI, HDFC Bank, they are all showing signs of strength. So I think, one can take a trade in this, because right now, in spite of seeing some sell-off coming in most of the stocks, HDFC Bank is doing quite well. So I would say 1900 acts as a support, but further conviction comes only about 1950 levels. So take it as a trading strategy right now.
Trading strategy right now. Okay, we'll keep an eye out on that too. Let's also focus on some of the other stocks as well. How would you be really looking at stocks like Bharti Airtel, telecom space, and Bharti is giving a positive signal there?
Yes, definitely. So I think Bharti, most of the times when the market gets a little bit choppy, acts as a defensive stock. So right now also it is holding well and it is showing strength. So I would say 1800 is the support, and I think in all likelihood this can go towards 1900 levels and plus. So for now it is showing strength, and to those who would want to get into a trade also should take today's low as stop loss and go for a target of 1900, 1920.
Okay, fair point. So 1.1% higher. That's one stock that you could definitely be looking at. That's positive. Let's also focus on the travel tourism theme. We did discuss some of the aviation stocks before, but let's extend this to hospitality. Again, one of our favorite themes to discuss. Vaishali, where are you going for your summer vacations? And which is the hotel that you're looking at? Are you looking at Taj Hotels, Indian hotels that is, or are you looking at Lemon Tree? Which hotel are you booking?
So, well, Indian hotel is always where your focus goes on. So, I would say right now, if I'm looking at it chartically, there isn't much of strength seen. It is below the 200-day moving average also. So, I think if I get an opportunity to get into this stock at around 700 levels, I think that would be a good level to get into. And besides that, Lemon Tree, Sami Hotels, all these are looking positive. But for now, as I said, I won't make a fresh trade. I'll wait it out.
Wait it out right now, not immediately. Do you want to really spring into any hospitality related stocks there at this point in time? Okay, Vaishali, any other key sectors or stocks that have caught your attention but I have missed out asking you on?
Well, so right now I don't see much of a buying opportunity, and seeing the crude prices going high, it's very tough to tell whether the market is going to take this well or no. And as we can see that we are not holding the higher levels, I would wait it.
Okay, got that. I hope this has also helped all of you, understand what exactly should be the focus. But I want to focus on the paint space as well. Asian Paints is something that I wanted to bring up. Asian Paints has seen another 85 lakh shares worth 1876 crore rupees change hands in the block deal window. SBI Mutual Fund was the buyer of the entire 3.64% equity that changed hands in Thursday's session, remember. Now there is another 85 lakh shares that have changed hands in the pre-open block deal window today. So that's again bringing the stock back into focus as well. Remember, it was Reliance Industries that sold a lot of its stake on Thursday, and SBI funds bought it. Today, again, there is 85 lakh shares, and we will, of course, eventually get to know who were the sellers and buyers. But Asian Paints for you, how are you looking at this stock?
Well, really, nothing much is happening in this stock as well. There is no trade right now, but if one has to, then 2180 acts as a support. And if the stock moves about 2300 levels, that would give us some clarity that yes, it is bottoming out and we can see the stock moving higher.
Okay, got that. So that's as far as the paint stock, Asian Paints is concerned. Keep an eye out on Asian Paints because consistently a lot of block deals are taking place, and we will of course keep you updated with all sorts of information that comes in as to who have been the buyers and the sellers there. When it comes to the real estate space, how can we forget asking Vaishali real estate? This is one of our favorite talking points too. Godrej Properties, your favorite, is back in the news today, developing a 14-acre land parcel in Bengaluru, staring at a revenue potential of 1,500 crores now for Godrej Properties. Positive news flows coming in. How would you look at tapping this one?
So I think realty sector still is holding very well. So talking about Godrej, well, it's one of the good companies in the realty sector. So I would say yes, it is still in the process. It's in a good, great trend, and still in a process of surging high. So I would say 2200 should act as the final support, and the stock needs to move about 2500 to give us higher targets. So for now, it is very positive.
Okay, got that. So that's the real estate story for you. How about FMCG? Are you looking at any fresh moves here at all, or is this still a space which is going to lag behind the market moves, Vaishali?
So well, so far, we haven't seen much of a movement coming in Hindustan Unilever. We haven't seen a good move coming in ITC, etc. So I think these are all laggards. Let's see if it catches some momentum, but technically there is scope for further upside move. So good for a positional buy to start accumulate.
Okay, got that. I hope this has also helped all our viewers out get a sense of how should you be really looking at it. F&O space, Vaishali, could you look and spot any stock for us? What would you look at in the F&O if somebody has to take a trade?
So I was looking at BEL that had opened well. So BEL is still holding on. So if 390 levels on near-term basis is held on, this can go towards 410, 420. That is one of the stocks to my liking. And as we spoke, Oil India also looks pretty promising, 486. So this can be accumulated, as I mentioned, with 440 as support and look for higher targets. These are the two stocks which I would focus on right now.
Okay, got that. I hope this has also helped all our viewers out as well. All right, in the end, Vaishali, could you help us strategies for this week? How would you devise that, especially because now we're going to be inching closer to the expiry of the series as well. So, what are the fresh strategies that you will devise?
I would say, really, Sakshi, let's wait it out because I'm not very convinced. Unless and until we see Nifty moving 24,900 levels, it's not worth it to give buy recommendations right now. I would be cautious.
Be cautious at this point in time. I think that's the best strategy to have at this point in time when there is a complete lack of clarity and direction in the markets. One has to be very cautious and does not really mean that every time you have to take a trade. Just wait it out, see a clear direction, and then maybe would probably look at the index. But meanwhile, stock specific opportunities are plenty. Many of them have already been marked out by Vaishali too. Vaishali, great to have you with us right at the beginning of the week. Hope you have a fantastic one. We'll see you soon on another edition of Market.
To you too.
Thank you so much. Thank you. All right, viewers, we'll start wrapping up the morning trading edition now. We'll start with the Nifty. 4% higher. You are actually looking at a move that's at 24,725. At this point in time, you are also looking at Cipla as the top mover, Power Grid, SBI Live, Bharti Airtel, Ultratech Cement, L&T, TCS. So you can actually just spot from the top 5 movers. No clear one sector has taken the lead. It's stock specific. I think that also indicates to all the traders what exactly should the strategy be. Be very stock specific when the markets on a index level are directionless. Downside, Tata Motors. That's the stock that you need to watch out for now, almost 5% lower. Geofinance, Dr. Reddy's, Adani Enterprises, Hindalco, Coal India, these are the other top laggards at this point in time. Let's also look at the broadest index, the Nifty 500 index. Where are you seeing some very strong moves developed in trade today? It's PI Industries, Gland Pharma, Shipping Corporation of India, HPL Engineering, Endurance Tech, Oil India, Jubilant Pharma. So the Jubilant moves also continue. Remember, from the block deal space, they have been in momentum. That's another one that you could be watching out for. Mid and small caps both up in trade, but 0.25% and about 0.3% higher for mid and small caps respectively. Sectorally, autos on the slowest lane, 0.1% lower. You can see FMCG mildly higher, 1/10% up. IT is in focus, 0.5% higher. You have media stocks, metals showing you some gains in trade today. Consumer durables, oil and gas, but the gains are limited to about 0.3-4% higher. Flat trade, sideways momentum as far as the markets are concerned at this point in time. We'll leave you at that with the current update on the markets. But do stay tuned. It's important to track all the developments as the day progresses. We might get to see what's happening around the world on the geopolitics front, and that's going to be also keeping us, on the edge as well. We'll keep you posted with everything. So stay tuned on to Business Today Television. In case you have some queries about the stocks in your portfolio or any stocks that you want to add afresh, do ask away all your questions at 12 noon on Daily Calls. I'll see you soon.